for the reversal trade into this lower low here. But into the high price, yeah, there is obviously a divergence here, but it's not exactly massively strong. But if you're going to do anything, the one thing you're not going to do is buy it up here. So that might just give you enough confidence to work the sell into that higher high. That might be something that we want to take advantage of. Might be. But it's not great. It's not great by any means. And you might have wanted to get above 188s. I would have accepted and understood that narrative quite easily. What else? Well, of course, we want to look at the spreads. We want to try and look at the crack spreads. Sorry, the inflation break-even spreads. We want to try and get a handle on that. We also want to look at the new 5-year break-evens now that the US markets are open, to see what the 5-year break-evens make of this. And you can see that the opening call on the 5-year break-evens was bearish. So we want to try and be short bonds, don't we? The opening inflation break-evens is bearish. On this chart, it's a positive correlation. That's why we're saying bearish. Actually, the inflation break-evens are bullish, which is bearish bonds because it's higher yields. And obviously that gives us an idea about the possibility of the top edge sell coming out to play, which is exactly what's happened. The challenge we had with this trade is very simple. The curve looks pretty grubby. In terms of how the curve should look into this price, we want to try and get the black line back towards the top edges. That would give us an incredibly strong storyline. Now, if we have to do some work on this, because into the top edges here, the curve was sitting at around about, the black line was sitting here. Well, the last time we traded this price, the curve was sitting here. So we do have a rising fight. So fight is up just ever so slightly. Not brilliant by any means in the short term, but it definitely is up slightly. So we do have at least a little bit of a premium to duration at this stage on the 5s, 10s. Now, obviously, with the 10s, the 2s, 10s dropping off considerably, there's going to be a lot of demand for 2s, 10s as it trades into the prior swing low. And that's where the opportunity started to show up right there, wasn't it? That's where the opportunity showed up right there. That was into that high price. You'd have been thinking about this and you'd have been saying, wait a second. This 2s, 10s is going to be absolutely nailed. And sure enough, the 2s, 10s was bought into the bottom edge. That put a sell into bonds, and the bond has dropped off a little bit, not by much. It's a bad time of day to do any kind of big macro business on bonds, but it's dropped off a little bit. It's enough to at least get your stops in at break even if you took it. It makes a bit of sense in terms of the technicals and the structure. And, well, bold if you did take it, guys, but I wouldn't be against that trade narrative at all, as I said, especially when you saw enough divergence on the Japanese yen just to take a pop at it. But obviously that divergence is very, very minimal, so you really can't cross the spreads against this trade at all, guys. You cannot afford to cross the spreads.